Good morning, everybody. Hey, welcome to Friday, April 10th. And as we celebrate Good Friday, the markets are closed today, both the stock market and the bond market. So Dave and I will be talking about whatever we can come up with today. It's going to be an interesting thing today whenever we don't have market news to talk about. But looking forward to that. And again, I want to thank you for joining us today. Remember, folks, listen. It's never too late. I mean, we've seen this about a 20% bounce back from the lows we had. And now is probably a great time to make sure that you don't have too much risk, because there's gonna probably be another leg down on this market. So give us a call. Let's do a risk analysis of your current portfolio. Give us a call at 863-382-0037.
One of those lifetimes at the moment. It's 8:40 now, 20 before 9. Time to check in on your money and see how Wall Street's been treating you. The markets are closed today, but it's still a time to update your money because the government is dumping data on us. Let's go downtown to check in and see what's going on. Statler Financial Services' own Phillip Statler is on the line with us. Phillip, how are you this morning?
Hey, I'm doing well today as we close out with the first full week of April. And it was a great week, Dave, when we look at what the markets have been. Actually, for the S&P 500, it's the best week the S&P 500 has seen since 1974.
Holy crud. I knew we've had a few up days, but I would not have expected to be able to call this past week a good week. But in 4 trading days, we actually went up enough to set a record of sorts, huh?
Well, yeah, I guess so. I mean, best since 1974, and that's been a long time ago.
Setting the table this morning. Yesterday was green ink across the board. As you mentioned, Phillip, the S&P 500 was up by almost 1.5%, up 39.84. Dow was up by 1.25%, up 285.8 points, and the Nasdaq was up by over 62. That was 0.75%. And even with the markets closed today, the post-trading futures numbers continued to go up green after the markets closed. Now, without any activity on Wall Street today for Good Friday, it's going to be quiet, obviously, but we certainly have some momentum, and that always gives rise as the crisis over. And you and I have been kind of saying there's a history of testing bottoms at least a couple of times, so don't start getting a case of euphoria yet, folks, right?
You're absolutely right, Dave. I mean, we've seen a nice bounce off of that low, but there will be a testing time coming. We haven't seen all the data. I mean, we're just now getting earnings for the quarter, and for those that had guidance, we'll see how much guidance gets pulled this quarter. So there's a lot of unknowns and uncertainty still out there to give us some concern as to what will look like in 3 months from now.
Absolutely, and there's certainly going to be a rearranging of investments based upon which companies are doing well or surviving this crisis. There's going to be rearrangements over time, so volatility is nowhere near over yet.
No, it's not, and that's why I think a lot of folks out there, they've seen this nice little bounce up. It's a great time, Dave, to really get their portfolios reassessed and make sure that they take some risk off the table now that they've seen a little bit of bounce in their portfolio.
Yeah, absolutely. If you were late looking at doing things and you saw your investments go woof down the commode, you got a little respite right now. Were I in a position like that, I'd call my advisor like Toot Sweet and say, quick, while I'm not losing as much, get my butt out a couple of things and into a couple of other things that make more sense right now, right?
Well, that's right. But you need to be careful of how you make those changes, right? So, a lot of our clients, of course, we'd already made that change from risk to safety. And remember, that's the first area of diversification is, how much do you want safe? And when I say safe, I'm not talking about bonds, folks. Bonds have been down terribly when this thing declined too. I'm talking about things that are principal protected, where you cannot lose your principal. So that's the the safety part and the risk part, it is the market. And so you need to make sure that we have the right balance between those two things, man, especially if you're in that danger zone, that 10 years prior to retirement, 10 years after retirement, because that 20 years time span is crucial in your financial planning.
Absolutely, and you bring up a valid point when you talk about that danger zone. The rules change markedly for different age groups. If I were 40 years old and putting money into my IRA, today, right now, for this short period of time, this is hog heaven because you're getting bargain numbers at the moment.
Oh, absolutely, man. If I was in my 30s and 40s again, I'd be dumping what I could, into this market because it's going to bounce back. The question is just when.
Yep, exactly. If it's going to be 10 years, though, somebody who's 55 or 60 right now, your advice to get to safety and get to non-volatility is obviously the watchword of the day. Even though we're looking at up numbers right now, like I said, if you lost a ton and you need to stabilize fast, this might be the time to look at it. But that takes a qualified advisor like Phillip Statler. Getting the government data dump this morning, we did get the consumer price index numbers, and normally this would be considered good news because inflation is, under control. But when you start looking at a time like this, seeing deflation is bad news, down 0.4% on consumer prices last month, and it was not all the price of gasoline going down because the overall CPI was down 0.1%, and both of those were unpleasant surprises, I gather.
Yeah, they really were, Dave. I mean, we looked at and the analysts or the economists thought the CPI should be down, but not down that much. Should be down about 0.3%, not 0.4%. And the big difference is the core CPI because it was actually supposed to rise 0.1%, and instead, like you said, it went down 0.1%. So, that's a pretty big swing there in what was expected versus what actually happened, and so that's not a good thing.
That kind of underscores the fact that all those bargains at the gas pump were not the only thing that were driving our prices downward. And when you're into an economic contraction, lowering prices is not exactly what you got in mind for the good of the economy from a macro standpoint. Anyway, you shared a number with me before we went on the air that's enough to scare the bejeebers out of a guy. One of the big brokerage houses and investment bankers was saying that we're looking at a contraction in the economy of how much are they estimating?
So their original expectation was, JP Morgan economists, they came out and said, look, we think that that the economy is going to be down by about 25-30% in this quarter. Now they've come back and revised that. Now they're expecting the economy will decline by 40% in the second quarter.
Wowzers. The question will be whether it actually will still decline for the entire quarter so we get that entire quarter number. We're all crossing our fingers. Obviously, we come out of this and have that bounce back. But that big a decline, that in one quarter, that's got to even beat the Great Recession or the Great Depression, doesn't it?
Yeah, you got Pelosi using that D word. She just doesn't know when to be quiet. She's talking about we may go into a depression now. But I look at some of the other numbers though that JP Morgan said that they do expect a significant turnaround in the third quarter. They expect growth to rebound by 23%, and the fourth quarter to rebound by about 13%. So they are projecting, again, their caveat is it depends on how long this thing continues on before we can, reignite our economy.
Exactly. That's the big variable we don't know about. For what it's worth, I keep hearing news out of New York where the real hot spot is. They think they're reaching their peak and starting to get over the top of the hill. They say that here in Florida right now, they expect our peak and to be able to start going down the hill on the other side of it will be somewhere around the 1st of May or hopefully a little before. But that's going to be a big variable as we go through the country. Some of the other states like Texas are seeing some big jumps up, meaning they're not anywhere close to their peak yet. And the longer we stay in this mess nationally, the longer the damage is going to be done.
You're right, Dave, and it's kind of like a wave, right? In areas of population, we're seeing that starting later and later as it kind of heads from east to west. Except for way over west in California, Washington State, they were kind of leaders in this whole epidemic. So, but like Texas and some of those other states in the Midwest area, um, they are behind us and behind the Northeast. And so, I think I heard this morning that Illinois thinks that maybe next week will kind of be their leveling off point. And so, every state's going to have their own kind of number. And when is that going to be done? I mean, if they're projecting Florida in May, I mean, you got to think Texas now is middle of May, end of May, 1st of June. And so that, you're right, Dave, that is the issue, is when does the nation, get to the point that we can open back up?
Exactly. Pretty much nobody expects it to be other than a quick rebound. How far up the rebound will be, we don't know, but the variable is when that quick rebound can happen. And it's all the vagaries of a bug that nobody can see without an electron microscope. And there's a cosmic injustice to that, isn't there?
Yeah, really, there is.
Absolutely. Resetting the table for the morning again. Nothing going on, even futures not being traded this morning. My data is from post-closing from last night. Dow was up, NASDAQ was up, S&P was up yesterday, and they kept on going up by pretty substantial margins to the post-trading last night. Once again, nothing going on this morning, but the world markets were generally up based upon our good records yesterday. Early morning closes over in Asia. The Asian Rim markets all up substantially. European markets also trading up midway through their day in the process. What have you got for commodity numbers, Phillip?
We've got gold and silver both up right now significantly. Silver's up 5.5%. Gold's up 4%. We've got crude oil down 7.5% right now to 23.21 a barrel.
What happened on that anyway? Did the OPEC meeting fall apart again?
I didn't think so, Dave. Everything I saw said that they've come to almost come to an agreement for a $10 million a day cut in oil production.
Yeah, I heard that too. I thought they were at an agreement and everything was going to happen. I expected to see crude oil up this morning, and my delayed quote's showing it like 12% down, and I'm trying to figure out what the Sam Hill's doing it. It's just got to be the.
I see it. I found it, Dave. Mexico throws OPEC historic oil production cut in doubts ahead of the G20 meeting. So I'm not sure what they've done, but Mexico's throwing some water on the deal.
I knew somebody had to throw a dead bat into the mix, because that's absolutely nowhere near the way I expected to go based upon the news I had last night. Mexico this time, okay. Phillip, this is a weird time without a doubt. Like we were saying, the strategies differ depending upon where you're at, where you were at when this whole mess started, and what your age is for that matter. That takes advice from a pro. How can I reach out and touch base with you?
David, give us a call at 863-382-0037. It's a great time. Now, we've seen a nice little bounce off of the bottoms. I don't think we're done. I think we'll see a test, at least one test of those bottoms again. So it's a great opportunity right now to have a financial x-ray to determine how much risk you really have in your current portfolio and to make those adjustments that need to be made. So give us a call at 863-382-0037. Hey, follow us on Facebook at Statler Financial Services, and then catch us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings on News Talk 730. And let me just kind of give you a preempt that this weekend, the radio show, we have a special guest interview with a doctor from Johns Hopkins University Medical Center. So a great opportunity to get some information about COVID-19 and some of her perspective. And so join us on News Talk 730. Again, that's 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty. We'll look forward to that, Phillip. Thank you so very much. I wish you a blessed Good Friday and a very happy Easter, sir.
All right, man. You have a great weekend. I will talk to you again on Monday.
Sounds like a plan. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember